Daljeet, a lot of companies have declared numbers, and particularly, I want to talk about pharma. Very, very mixed bag set of numbers. Injectables have not done well. Some companies have done very well who have specialty portfolio, and some in generics have really taken a knock off the pricing pressure. What is the key takeaway from pharma numbers?
Good afternoon, Pankaj. Yes, I think this was expected that this quarter would be a bad quarter for most of the companies because of the inventory lying for a high cost raw material, solvent, etc. with almost all the companies. And pricing pressure has not eased at all. So obviously there was twin pressure. The top line, you are not getting the realization part, and you are already saddled with a higher cost inventory. So this was very much expected. Most of the companies have in line with that expectation delivered. So there is a severe pressure on margins for almost all of them. But I think our understanding or the challenge checks and our analysis shows that probably this was one of the worst quarter which is behind. And from here onwards, we will see good recovery. One that the channel destocking has happened, inventory problems are uh, slowly and steadily getting away. And so from next quarter onwards, we should not see that kind of problem. And on the pricing front, again, a lot of consolidation has happened. So probably we'll see stabilizing their style of working towards specialty, complex, generic kind of products. So I think there is a lot of change happening. We have kept pharma as a sector on watch list in the last month, October, when I wrote the monthly strategy note. That time we had mentioned that probably pharma will come into reckoning in next 1 or 2 quarters, and I think that's going on in that direction. So we are positioned accordingly. We already have two stocks there. One has been an accident, severe blow, Gland Pharma, which is after the results 15% decline in one single day. But I think that was more to do with some sentiments on Chinese promoter or something of that kind. Nobody knows what is the actual reason. Actually, in fact, the company has shown quarter on quarter good recovery of almost 20%. So there was no reason for on the operations part to sell off, but there was that kind of sell off. But we are still maintaining, and it is a part of our portfolio. Gland is definitely still a part of our portfolio. Alembic is the other one. Alembic Pharma we talked about earlier also. So there was this major concern about their new facility when it will get through the FDA approval. That has happened now. They have already started getting 3-4 approvals from that facility. So which means the capex done in the last 4 years, 1800 crore capex which company has done in last 3-4 years will start seeing the light of the day. So in next 2 years, probably we'll see benefits of that capex coming in. That is the reason why we are holding Alembic Pharma. And Divi's is the third one, large cap, which is already there, also there in our portfolio. Right now, draining a lot. But again, we are maintaining our positive view and faith on the company that this is an aberration. Whatever results have come, there is a problem of optical what you say irrationality also, no, because there is a lot of things to do with the base. No, there is some quarter COVID, there is some quarter no COVID. So all those things are creating a lot of this illusion about the growth is going down or what happened with these kind of companies which have a very strong moat. I don't think one should be very apprehensive about future. So for next 1 or 2 quarters,